So Feroz, coming next to you, I would like to ask you this question: how you have, advised your investor, taken them through this journey of rising gold prices? What is your outlook, and what are you advising to your investors right now for investing in gold?
The HNI and the ultra HNI community, what happens is whenever prices of a specific commodity go up very sharply, investor interest shoots up. So we want to bring reality to our investor in terms of what kind of 3-year returns on a rolling basis can you expect out of gold. So if it's an investor, then the strategy is different. If it's a trader, the strategy has to be different. So for an investor, if you look at the last 20 years, the 3-year rolling return, if you bought gold on any particular day, or on every day in fact, and sold it 3 years hence, the per annum return in rupee terms is 12% per annum. In dollar term is close to 10% or 9.5% to be more precise. So that's the mean return for a 3-year holding period a person can expect. So if their expectations are derived out of the last 1 year's performance, then we discourage them and show them the reality. Point one. Point two, gold is as an asset class is a very good hedge for currency depreciation. Like our co-panelist also mentioned, from 2011, the dollar return on gold has been abysmal, but the rupee return has been 84% till July 20. If that's a couple of months old data, but 84% from September 2011 is a reasonable portion of that comes out of rupee depreciation as well. So anybody who's had global objectives, could be travel abroad, could be getting his child educated abroad, wants to accumulate dollars, then gold becomes a very good asset because it helps you retain the dollar value of your wealth. That's point two. Point three, from a prospective basis, where do we see gold as a firm? It's to go to the genesis of where does the demand come from. It comes from central banks or it comes from consumption. If you look at central banks, 7 out of 10 central banks have not added to their reserves over the last 5 years. Consumption demand, China, India, have deteriorated in terms of consumption over the last 5 years, December 15 to 19, early FY20 end. So what am I trying to get to is the consumption demand, given the sovereign gold bonds, at least in India, is being replaced by non-physical, but a more paper gold kind of a strategy from an Indian investor standpoint. Ornamental values exist. So I'm not very bullish as a firm on the consumption demand. Maybe the central banks, of course, a few countries would top up their reserves. So consumption demand would see a decline. But hence, I'm as a firm not very bullish. The expectations are 10-12% on a rupee basis per annum.